Assalamualaikum warahmatullahi wabarakatuh. We from Group BA44C will present about Islamic financial system. Firstly, I will introduce about our teammate. Our group leader is Siti Nurjaslina binti Jasmi, and she is a fourth presenter. Next, Farah Syaira binti Rosli as a second presenter. Nur Afrina Akila binti Zaiful Anwar as a fifth presenter. Siti Alida binti Muhammad Nordin as a third presenter, and me, Siti Nariza binti Kamis as a first presenter. I will present about introduction about Islamic financial system. Islamic finance comprises of financial services that are specifically designed to comply with the Islamic law or Sharia, and is guided by the principle of Islamic economics and function of money in Islam. As it's the most effective part of the Islamic economic system, financial services are carried out in all the sectors of the Islamic economy. There are the financial activities in the public sector such as planning and implementation of the country execution policy, private sector which is aimed at achieving macroeconomic objectives such as controlling inflation, consumption, flow and liquidity, and finally welfare sector such as zakat and baitul mal. The welfare sector is one additional sector which exists only in the Islamic economic system, not anywhere else in the conventional economic system. This will show that Islamic finance takes care and concern about the well-being of the society. The Islamic financial system must have two elements. First, the system must be carried out in the Islamic spirit, not just by label. Second, the system must have the characteristic of sophistication and progressive. The former means that the Islamic financial system places equal emphasis on the ethical, moral, social, and religious dimensions to enhance equality and fairness for the good of society as a whole. The second element means that the Islamic financial system must be stable, sophisticated, and progressive so that the system can compete with the conventional financial system in all parts.
Assalamualaikum and good day to Dr. Patricia. My name is Farah Syaira binti Rosli from class BA 242C. We'll explain the comparison between riba interest versus riba or profit. In Islam, riba is strictly prohibited. Islam supports business-based banking, where banks are allowed to earn true profit from business. That is, bank profit will not be fixed prior to business, but riba is fixed whatever the business situation is. Now, I will tell the comparison between riba and RIB. In conventional lending, the relationship between parties involved is lender, creditor, and borrower, debtor. In Islamic lending, that is made permissible via a trading mechanism, so the relationship between is no longer between debtor and creditor, but between buyer and seller. Firstly, riba is the access over the principal in a loan transaction, whereas RIB is positive and result of business operation. RIB is commonly translated as profit, which is amount of money added on top of the cost price of a goods or a services. This extra is known as markup. The profit of the entrepreneur comes from this markup after all expenses are paid. The extra in the form of markup represent compensation to the trader for his expenses and for making the effort and taking the risk to bring a product or service to market. Riba, on the other hand, is generally added not to a cost of product but to a loan of money. Okay, next, riba or interest is an unearned income, whereas the RIB or profit has to be earned by investing labor and capital. Riba, interest, and RIB profit are different because they are earned in different ways. Trading and by extension investment take place in the real economy. Buying and selling meet people's need. Lending at interest, by contrast, does not directly meet most people's needs, as money in itself is not useful. Why? Profit have to be earned by active participation in economic activity. Interest is gained passively without the participation of lenders in the production or distribution process. In the case of collateralized loan, interest is earned even without taking risk. Last, riba is predetermined and riba is uncertain. In riba, the interest is predetermined before the process of the transaction. In the other hand, the amount of profit is uncertain and only will be determined after the process of the transaction of the business is completed.
I am only a tutor to proceed. Today, I would like to talk about Islamic finance contract versus conventional contract. The topic that I choose is Murabahah versus conventional law. So, what is Murabahah? Murabahah is a type of contract, a form of sale, where the seller expressly mentions the cost of the sole commodity he has procured and sell it to another person, which is the buyer, by adding some profit or not thereon. Murabahah is one of the most popular finance used by Islamic banks and financial institutions. The law is not the interest-bearing one which is conventional or in essence form or embodied. Conventional is, in conventional law, the bank lends dollar money to an interest. Bank then earn a profit from the interest rate under the normal law. Whereas in the self-contract, while the conventional law is an interest calculating in different and transition. So there's a difference between Murabahah and conventional. Murabahah In Murabahah agreement, the bank sells a commodity for profit whereby the original cost and the profit are discussed to the buyer. In case of Murabahah, the bank sells an asset and charge profit, which is a trade activity between higher purchase value in the Islamic Sharia. While in conventional, unwanted bonds and credit and charging interest therefore is pure interest rate transaction which Islamic Sharia also forbid. Whereas giving loan and charging interest therefore is pure interest rate transaction which however is prohibited by Islamic Sharia. So there are three parties in Murabahah. The first party is non-value of good. The second party is Islamic Bank and the third party is customer. In each verse of Murabahah, some value of good will sell off machine for 100 to Islamic Bank. And then Islamic Bank will pay for the price for 100 in some value of good. And then Islamic Bank will sell on machine to the customer with a given payment with 130 days, and then customer will pay for purchase price plus premium which is 110 days. In this case, supplier offers sell the machine for immediate payment to Islamic Bank, and then Islamic Bank sell the machine to the customer with deferred payment. Our every day is a market price because of the government.
Assalamualaikum, my name is Siti Nurjazunda binti Jasmine and I will be the next presenter and I will present on the topics in chapter 3 of the FIN 546 which is institutions and markets. So the topic on this topic in this chapter is difference between sukuk and conventional bonds. So before we go further, I will explain you what is sukuk and conventional bonds. So, what is sukuk? Sukuk is a certificate of equal value representing in undivided shares in ownership of tangible assets, usufruct and services, assets of particular projects or special investment activity. While for the conventional bond is a debt investment in which an investor loans money to an entity, typically corporate or governmental, which borrows the funds for a defined period of time at a variable or fixed interest rate. So, what is the difference between these two? So, the first difference is the asset and ownership. For the conventional bond, bonds don't give the investor a share of ownership in the asset, project, business, or joint venture they support. while for the sukuk, they give the investor partial ownership in the asset on which sukuk pays. The second difference is investment rewards and risk. For the conventional bondholders receive regularly scheduled, it's often fixed rate, interest payments for the life of the bond, and their principal is guaranteed to be returned at the bond's maturity date. While for the sukuk holders receive a share of profits from the underlying asset and accept a share of any losses incurred. The third difference is issue units. For the conventional bond, each bond represents a share of debt, while Suku represents a share of the underlying asset. And the last difference is effect of cost. For the conventional bond holders, generally aren't affected by costs related to the asset, project business, or joint venture they support, while for the Suku holders are affected by the costs related to the underlying asset. Higher costs may translate to lower investor profits and vice versa.
Assalamualaikum warahmatullahi wabarakatuh to Dr. Badrul. My name is Noor Afina Academic Farmer. I am from BA 244C. Today I will continue this presentation about the structure of Islamic bank compared to conventional bank. Okay, firstly, as we know, conventional bank is designed to have two main functions, which is to collect a deposit and to give a loan. Therefore, Islamic bank, while income and pricing remains important, there is also consideration on why a product is launched and the impact it has on customers. Not all fees can be charged, but not all features can be used in Islamic bank. Okay, the difference is, firstly, facility amount over financing periods. For conventional bank, the increases as amount is compounded and capitalized as new principal amount. But for Islamic bank, they cap at the maximum selling price agreed in the akad. Number two, the calculation of installment and profits. For conventional banks, the calculation is based on the base rate plus margin. But for the Islamic bank, the calculation is based on this rate plus margin the same as conventional bank, but they capped to the maximum selling price. Okay, for the early settlement, for conventional bank, 1.0% charge on loan billings outstanding to compensate loss of interest, but for Islamic bank, there's a no early settlement. And lastly, for the risk ownership, for conventional bank, the customer will always do loans which is risk transfer, and for the Islamic bank, based on the contract, the bank must bear some risk to earn the returns, which is risk sharing. I will pass to
Highlights the importance of close link between financial transactions and real economic activities, thus emphasizing on the importance of serving the real economy. Overall, Islamic finance not only offers an alternative source of financing for sustainable development activities and projects, but more importantly, it has inherent characteristics and principles that lend themselves well to catalyzing and promoting real economic development. Moving forward, there are two important areas which are imperative to ensure that continued development of Islamic financial system for the purpose of serving the real economy. First is the need to highlight with a greater clarity the value propositions of Islamic finance, ensuring that it remains from form of financial intermediation that serve the real economy and that it will continue to be beneficial to the society. This requires further in-depth applied research to develop more financial products that create closer links between Islamic finance and real economic activities in terms of its operating models, risk management, and supporting infrastructure. Second is for the outreach of Islamic finance to be inclusive and to be accessible to all, particularly the lower income groups and small businesses. This is because an important agenda in the global economy is to achieve a more balanced growth to reduce income disparities. That's all from us. Thank you.